Yes, indeed. It's a big day for the banks. We have several names hitting all-time highs today, including Goldman Sachs, Morgan Stanley, some of the regionals like Synchrony, Bank of New York, Citizens. You want to start us off? I mean, you could go big because you own Goldman and Morgan Stanley, XLF new high, or you can go smaller because you have had more exposure in that area than anybody on the show by a lot.
Well, quantified at 35%. I mean, it's obscene to a certain point. And we've been building that exposure in the JOT ETF since January of 2024. As I said the other day, I keep waiting for the moment where we begin to see a paring back in some of the holdings. But whether it's insurance, private equity, regional banks, money center banks, brokers, asset managers, we just continue to build positions. I do think that kind of in line with the conversation we just had with seeing a lot of the momentum names pulling back like a Coinbase and others. I do think in the financial sector you have to be respectful of the valuation. The valuation is getting a little bit stretched in the names like JP Morgan, in the names like Goldman Sachs, which I own personally. I think that's one of the reasons why the regional banks are getting a lift here. We own Citizens Financial Group. We own Regions Financials. Those are two companies that have seen a significant improvement in the assets on their balance sheet. They've done an excellent job in kind of cleaning that up. And I think that's really underneath the surface what's happening here. Being very respectful of valuation is important in the financial sector. I think that's evidence of the last several weeks.
You're the first person I can recall, is my memory serves me well, that has talked about a bank stock as having a valuation that is potentially too rich. Because that has not been anywhere close to the conversation that we've had on this desk for now as long as I can possibly remember.
No, and
everybody's always like, well, they traded at such a discount to book and blah, blah, blah. Now you're telling me that JP Morgan, which I don't even know what its forward PE is, we can pull it up. I think I saw that Goldman's was 15. What's JPM's? What do you think it should be? 15.
That's probably right about in line. But if you're looking over the last 15 years, listen, you got to throw out 2006. I mean, we'll talk about 2006. We could talk about Regions Financial. It was a $39 stock.
We don't need to go back 19 years.
Today it's struggling to get above its 5-year high.
Are you saying that the bank stocks in general are now too rich?
No, that's not what I said. That's not what I said. I said there are select few of the money center banks like JP Morgan, like Goldman Sachs, that we have all owned, that we have all talked about on the show. Josh has owned JP Morgan for as long as I can remember.
That's right. Weiss owns Goldman.
Weiss, Steve has been with me in Goldman Sachs. I apologize, Kevin. I'm sure you're there with us as well. And you too, Bill.
Holdings.
But in March of 23, I bought JP Morgan. All I'm saying is that some of those names, maybe the valuation is getting a little bit stretched relative to the earnings that they're delivering. And what you're seeing in the most recent weeks is that the market is doing a little internal sector rotation, and it's looking at some of the regional banks, and they are definitely undervalued relative to their money center bank peers.
Weiss, I've teed you up well because you got Bank of America, new 52-week high, Goldman Sachs, all-time high. You're not in JP Morgan, I don't believe. But what about that comment Joe made?
It's interesting. I'd agree with it, frankly. On a price to book, which is typically how the banks trade, they're getting up there. And JP Morgan's always been up there. Goldman's actually at a discount to where it's historically. But if you take a look where the yield curve is, you pointed to how it's steepening, that's really where the correlation is. And then in a robust market, as we've all talked about, the IPO calendar, the M&A calendar, as rates come down. So lots and lots of tailwinds here. And the overall valuation of the market also, which is fair, I would say, if not a little stretched, is a valuation umbrella. So you look for where you put capital to work. So I'd say it's a great environment, as is reflecting the stocks. I don't think they're overvalued here for everything I said. So I think there's some more room to run.
I mean, look, Bank of America relative to JPM and Goldman is cheaper, 12 times rather than 15. Bill Baruch, what's your play here?
We own J.P. Morgan, and we own Goldman Sachs, number 9 and 10. I've said it earlier in the show. The steepening yield curve, I think, is a great tailwind here. And taking the words again from Weiss, it was the mergers and acquisitions and the deal-making activity continues to beat expectations. I think these are great names to hold, and I think that they are, over the next 18 months, going to be higher than this. In the near term, I'm just not sure if we're going to continue to accelerate at this pace.